Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Good morning,
Good morning.
Bruce.
How are
How we
you?
doing today?
I'm doing fantastic, doing really good. Hey,
Good
got a
deal.
lot of things to cover to make sure that our customers, our wannabe customers, people that want to buy or sell in real estate have an understanding of some alternative programs that they may be interested in. And I want to talk to you a little bit about that. But before we get into that, I want everybody to know that no matter where you're looking in the United States of America, Tom McNamara and Bruce Woodburn can assist you with buying or selling a home anywhere. I can help you with the
Absolutely.
mortgage, and he can help you with the real estate.
You got it, man. You got it. So yeah, I'm pretty excited to talk about this morning. And I did want to remind you that it's a new month and it's the last
It is
month.
a brand new,
So
it's a brand new month, baby.
it is hard to
Yeah.
it is hard to believe we're in the last month of 2023. So
You know what? This is when so many people take their foot off the gas pedal. And I'm going to
yeah,
tell you something. What you put into your business and your efforts today is what you're going to get late January, early February. So
absolutely.
if you took your foot off the gas pedal at Halloween, you're going to have it's going to be soft between now and February. Where
Yeah.
man, you and I, we just put the pedal to the metal and go for it.
That's absolutely right. So, hey, so
Two
let's
old, two
let's
old
chat about
guys.
DSCR. I'm big into working with investors. I work with a lot. As a matter of fact,
And
I'm
you're an
helping.
investor, and I'm an
I'm an
investor.
investor. You're an investor, right? And so, a lot of people have limiting beliefs around how they can get a loan. How they can qualify for a loan. Credit scores and income and all that kind of stuff. And there's some alternative loan products out there, more than just the one that we're going to talk about. But let's talk about DSCR. What the heck is it?
Yeah, that's a debt service coverage ratio. It's just a fancy term for you can use the income that comes from the rental property to qualify for the mortgage. You don't have to have your tax returns, your pay stubs, W 2s, or pensions. You can just use the income that comes from the property. That's what a
Okay,
DSCR is. And there's got to be a
so
ratio to the amount of rent versus the payment, PITI payment.
right. Yeah, so it implies. I'm honestly, I'm always. This is probably the most confusing loan product for me. Just in. I mean, I understand the basics of it, but when you get into the specifics, so debt service, that's how much money the mortgage is going to cost me, and then coverage
That's right.
ratio is how much the rent is, right? And
That's
right,
simple.
I understand that, and then like, what's the number? I always hear like, oh, it's a 1.15 or a 1.2. What does that mean?
So you only need, with me, you only need a 1-to-1 ratio. As a matter of fact, I can
Okay,
use a 0.75 ratio. So let's just say your mortgage payment on the DSCR for simple terms is $1,000 a month.
okay,
If you're getting $1,000 a month in rent, that's a
hmm
1-to-1 ratio. If you're only getting $750 a month in rent, but the mortgage payment's 1,000, now
hmm
people do this all the time because they know they got value in the property, so
sure,
they don't mind a 25% haircut on that. We can still do those. They come as a little bit of a price increase for that. But
sure,
DSCRs are real popular with people, particularly investors. Investors are oftentimes self-employed people. They're writing off all their income.
hmm
They don't show it on the tax return, but we know they make it.
hmm
So you can buy a home with that, Tom, or you can refinance a home with that. But it must be a rental property. It can't be owner occupied for a
okay.
DSCR. So it's
So
good
let me
for
ask you real quick.
investors.
Let's go back to the $1,000 mortgage. Is that including taxes and insurance?
That's a PITI payment, principal,
Okay,
interest, taxes, insurance, HOA, all has to be included
HOA, right?
to determine the
Any of that.
ratio.
And then,
That's right.
so it's all in. And then what about uh, what about like escrow? Do you do escrow and insurance?
Well, you can waive escrows on those because you're always putting down at least 20%.
Okay,
So Yeah, you can waive escrows on them without
Okay, so
any
you don't. It's
problem
not
at all.
required necessarily, but it's obviously simpler to pay escrows.
Anytime
Um,
you waive escrows, you're generally going to pay a little bit more of a premium to the discount point. You
okay,
want to waive your escrows, you're going to pay a little bit of a premium to the discount point. It
because the
usually
bank's
runs,
taking a little more.
even on conventional loans, it's usually runs around a quarter of a percentage one-time fee.
Got it. Got it. So then, what about my credit score? Like, are you going to check my credit score?
Absolutely. Credit scores have a great impact on this. You have to remember
Okay.
the lender isn't really going off your income. So we don't really know how much money you make. So we only have a couple of things we can use. We can trust that the rent is sufficient.
Hmm.
But the other factor is we got to make sure that you're credit worthy and
Okay.
you need to have skin in the game. So credit worthy would be your credit
Okay.
score, and
Right.
skin in the game means that you've got a substantial down payment, or you can do these on a refinance too, Tom. So on a refinance,
Sure.
you can go up to 70% cash out refinance. I had a client in
Sure.
my office on Friday that I'm doing a 70% loan to value. And he's got a rental property. He's pulling money out of this rental property to go buy another rental property and do another DSCR
Yeah.
on that one.
So what about if the place isn't rented? Can you go on projected rents?
Yeah, there are ways you can go off projected rents. We use some formulas, and we have companies that go out and estimate what the rent would be
Okay.
on a long term rent. That's
Right.
correct.
Oh, long-term rent.
Yeah, it's called a rent multiplier. It's used for conventional loans as well. They're a rent
Okay.
multiplier. And the appraiser determines what the average rent would be in that community, in that neighborhood for that size house.
Yeah, when I did one of these a while back, and the appraiser came out, not only appraised the property for sellable value, but also the rent income. So I remember that
Yeah.
now. So you
Yeah.
mentioned long term. What about short?
Oh, interesting enough. So most lenders will not do or use rental income for short-term rental because it's just not consistent. It's hard to verify. We can. We have companies that will evaluate that property and the same way they do on long term, determine how much rent would be received in a short term basis, what your percentage of occupancy would be, and determine what
Sure.
that rent might be for a short term rental. So again, your maximum loan to value on a purchase of that would be 70% loan to value or 30% down. Remember, this is a rental property. Even on a conventional loan, you got to put at least 20% down. So this is only a
Right.
10% additional deposit down payment. On a refinance, you can go to 65%. But you got to remember, most companies won't touch a short term rental on a DSCR. I have no problem with that at all.
Yeah, the only other company that I know that does it, and I'm sure there's others, but the only other company that I know that does it charges a pretty high premium, and their mortgage is a commercial mortgage, not a residential mortgage, and it has some clauses in there that people don't even think about. I mean, who really reads every line of the mortgage, right? I mean, I'm being
Well,
honest.
you
I've
have
signed
to
a ton
remember
of them, and I've never
anytime
read every line.
anytime you are not verifying income,
Hmm.
you're subject to what's called non-QM guidelines. And when you're into that, a lot of these like stated income programs that people are doing right now or
Hmm.
hard money, you can only do hard money. You can't do it on a residential loan. It's illegal. It was outlawed in 2010.
Yeah,
So
yeah.
that's why they do them as a commercial loan. And
Understood. Yeah,
essentially,
my point wasn't so much that it was commercial, but in the commercial loans, you got to be really careful. They slip in some clauses, like if we don't feel comfortable, we can call the note due anytime we want. It doesn't
yeah.
exactly say it
Yeah,
in those
that's
words, but
that's
that's what
that's
it
a
says.
dangerous thing. I don't have that in my
That's a
loan.
dangerous thing.
Yeah. I
If we
just
don't like
decided
how we feel today,
I decided on Thursday I need the money back, right?
yeah, you
So no, we're
want
not
to be
going to do
really
that.
careful of that.
So you know where we're starting to see some popularity on these are these crash pads. So let's talk a little bit
Oh
about
yeah,
crash pads.
yeah. So crash pads, right? There's housing is tough these days, especially for young people or people that need flexibility, right? Traveling nurses, airline stewards, stewardesses,
Flight attendants. Yeah.
anybody that's in and out, transient. And so there's a big push for people buying like 3 and 4 or 5 bedroom houses, and converting the spaces like offices, dens, dining rooms, common areas, and converting them into bedrooms. So making that 3 bedroom a 6, or making the 4 bedroom a 7. And there are low people in there, and buy the room, right? They're renting a room out for maybe 7, 8, 900 bucks. So the whole house, you got your private bedroom that's usually lockable, right?
But you have
And
your
so
bedroom, your bathroom, and the kitchen, right?
yeah, yeah. So usually you'll have, obviously there's typically one master bedroom that'll have, so that'd be the person that pays $1,200 a month. And then, the other ones are usually shared. It's like, okay, you two use this one, you three use that one, kind of stuff. And, you know, obviously, you don't necessarily know all the people, but if you need a place and 7, 800 bucks a month sounds good, um, but how are people
I've
buying
got a
them?
customer that does this right now for flight attendants, but you have to be a flight attendant to get in. So they're not going to have,
Oh,
Will Delbert Willie Smith down the street
got it.
renting in the same house with a bunch of flight attendants. That would be weird. But
Yeah.
if you're a flight attendant, that's what they design them for. Also, like you said, for traveling nurses is very popular as well.
Yeah, yeah, yeah. A good friend of mine actually has put a tiny home in his backyard in College Park. Put a tiny home in his backyard and rents it out. And all during COVID, he had it rented out for 3 grand a month to traveling
Wow.
nurses. 3 grand a month
Wow.
for a tiny home. 300,
So this is a
340
great
square foot.
opportunity for you to maximize some rent and help out on the shortage of rental and the high
Yeah,
cost of rental units right now. So it can fill a gap, and whoever the tenant is, whether it's a nurse or a flight attendant or whatever, um, can keep some of their things there. Versus you can't rent a
right,
hotel room and keep any of your belongings there long term. So you can have
right.
something that you can lock up, a drawer or something like that,
Yeah,
and keep your things in. So it does
yeah.
fill
So if you're
gaps.
consistently going back to the same location all the time, it might be a good solution for you.
Yep. But if you are looking to do something like this, um, there are ways that you can do it. But when it comes time to maybe buying additional properties, you have to be careful because the income that's derived has to show on your tax returns, because you can't have, you know, 12 part-time leases on a property that have multiple people into it. Fannie Mae, Freddie Mac won't accept those, but we have some products that will. You just have to have had a consistency over like a 12-month period of time and show
Got
them
it.
on your tax returns.
Yeah, I tell you, man, the
Yeah.
investor world is really, really, really interesting.
You know
I'm
why? Here's
fortunate.
here's You're right. You are fortunate. I'm fortunate too. But here's the reason for that. You and I talk about this every doggone week. The average person, 8 out of 10 of them that would like to buy, they're so afraid of the interest rates. They're going to be the ones that are going to get totally left out on this opportunity. Because as soon as rates drop, they're not going to buy. The investors are like, screw the interest rate. I'll refi later. They don't care. They see the
Yeah,
big picture. The average person, they're just not seeing it. They're just not seeing it.
yeah,
And they're going to pay dearly, because when those rates drop, they won't even compete in the market. And it's a sad state of affairs. You and I have done everything to help convince them, but it is what it is. Hey, listen, we're out of time here, brother.
we are. We are. All right, brother. Well,
I'll
you have a
see you.
great day, man. Have a great
Yep.
week.
Take care.